We are back on Morning Movers. The consumer will be in focus when Visa reports earnings today after the closing bell. Analysts are expecting EPS to come in at $2.86 a share on an adjusted basis. Revenue is expected to total nearly $10 billion for the second quarter. Keep in mind, shares of Visa up nearly 40% over the past 12 months. Time now for Options Corner. Joining us to take a deeper look at Visa is Rick Ducat, lead market technician. All right, I gave the, essentially what the year over year looks like, but what trends are you paying attention to on this chart for Visa, Rick?
Yeah, a nice move up for Visa, up almost 36%. The consumer finance sector in general outperforming not only the XLF financial sector and the broader market here. If we were to look at our candle chart, we can see that Visa remains near the highs. We can see that we have our volume profile point of control coinciding with our moving averages here. So there's quite a lot coming together between about 349 to 354 or so. Then if we were to progress out of this heavy volume area, there's a couple notable levels. First, we have our old high area here, our red line near about 366. And then finally, that closing high, 373.31 to the downside. Another volume node in this area near about 335 or so.
Okay, all right. And then what do you notice in terms of any recent options activity for Visa, Rick?
Yeah, yesterday's options trading about 22,000 total contracts, even split between calls and puts. If we were to look at our open interest here for the August 15th expiration, the monthly expiration here, the expected move is between about 336 to 376. That's our gray area here, about 5.5% plus or minus. But we can see that in terms of our range for the call side, 330 on the low end, 410 on the high end, the highest activity at 375 there. If we were to look at our put side more, it's quite different. You can see the range is 260 to 365, the highest activity at 340. Puts are often more dispersed because people would be looking to, take small credits for very low risk types of trades here. There was one interesting opening trade I saw as well, plus 750, October 17th, 390 call at a 370 debit here. A bullish opening trade, $277,000 debit here. It would need about 11% or so to break even. So not long term, but a longer term look out here, looking for some bullish upside in this consumer finance space.
It looks like you mentioned that even split between calls and puts, so it looks like the bulls and bears fighting it out. Now, take us through an example trade is Tom White, senior options contributor and co-host of Fast Market. All right, Tom, what's the approach for an example trade for Visa, given that we've got earnings in front of us?
Yeah, the stock's pulled back about 5% from those all-time highs that we saw just last month. Implied volatility levels, because we've seen the stock move up, you saw from Rick's charts, aren't as elevated as they typically are going into an event risk like earnings. So with that in mind, there's some volatility dispersion between the option series that we want to take advantage of. So I looked at an example trade here that's bullish in setup here, where I'm going to go out to the August 8th weekly options. It's 10 days to expiration. And we're going to buy something at the money. The option market's priced in about a plus or minus $10 move in the shares, just about 3%. So implied volatility levels, while elevated in the near term, aren't that elevated overall, just due to the moves that we've seen in the overall market and Visa. So looked at a strategy, a call diagonal that's bullish, where I'm going to go out to that August 8th weekly options, expires in 10 days, buy the 355 strike call, and then against it, in the near term, August 1st weekly options, where we have that higher implied volatility, we're going to sell the 365 strike call. So a bullish $10 wide call, diagonal to the upside. You're going to pay roughly, the stock opens up here about 355, about $5.30 debit. There's your risk, $530 per spread. But you can see here from the risk profile, anything above about 357 is going to be profitability. And why is it a $10 wide call diagonal priced nearly half the width of that call diagonal? It's because the implied volatility levels. You're buying about a 30% implied volatility on aggregate in the August 8th weekly options, where you're buying that 355 call, and then selling about a 42% implied volatility on aggregate in the August 1st weekly on the 365 call that you're selling in this one. So that dispersion creates the lower price entry point. You want it to go towards 365. That's about that one standard deviation move that the option market's priced in. So if you're bullish, where you think this stock might start tracking back up towards those all-time highs, this strategy takes advantage of that.
All right. Thank you, Tom. That's an example trade there for Visa.